Welcome back, traders. Yesterday and today definitely hit us with a sobering pullback after Monday's all-time high euphoria.
Yeah, a bit of a reality check.
For sure. DIA cracked that support line we've been watching, and the dollar flexed against its downtrend, perhaps warning of deeper equity pressure ahead. With XLE coiling like a spring above triangle resistance and tomorrow's GDP data lurking, this feels like the market's testing our nerves before the next leg.
Okay, let's do it. And just quickly, you're tuned into the Stock Market Summary Series. We're going to get into what we're seeing in the charts. But before we do, just remember that none of this is buying or selling advice. Okay?
Right.
We're just here to provide market commentary and trading education. Keyword being education. Nothing we say here is financial advice.
Absolutely.
Also, if you're liking these videos, do us a solid and give us a like. We'd really appreciate it. All right, with that said, let's get into it.
Okay, so let's unpack this setup. Today felt less like, heavy selling pressure and maybe more like a structured rotation, especially after that massive AI push we saw on Monday.
Yeah, agreed. The indices like SPY and QQQ saw pretty shallow dips, only about 1/3%.
Right.
But the core technical damage, like you mentioned, is concentrated in the Dow and small caps.
And that down move is key, isn't it?
No, absolutely. What's fascinating here isn't just the percentage dip, the 0.4% shed on DIA.
Yeah.
It's the structural implication. It explicitly broke that upward sloping support trend line.
The one we've been tracking.
Exactly. That suggests institutional money might be taking some profits, maybe bracing for weakness. If that trend line doesn't recapture quickly, this pause, well, it could turn into a much deeper problem.
Yeah, and look at small caps, too.
Yeah.
Always the canary in the coal mine.
Right. The Russell 2000 ETF, IWM, took the hardest hit, down almost a full percent, minus 0.91%. That really underscores a definite vulnerability in the risk-on trade right now.
Okay, and here's where it gets really interesting for the bigger picture, the macro environment.
Yeah.
The U.S. dollar index, DXY. It is flexing higher. It's directly challenging its downward sloping trend line. And if the DXY successfully breaks and holds above this resistance, well, it's going to act like a headwind. It puts definite pressure on large cap equities, even if the selling stays kind of subdued for now.
That dollar strength narrative is definitely strong, but look at energy. It's completely ignoring it.
Right. XLE was the standout winner today, up 1.3%.
That's the key divergence point you need to watch. XLE closed above the resistance trend line of a massive symmetrical triangle.
A huge pattern.
Huge. It suggests accumulation, maybe a major impending price move. We're seeing specific stocks like Phillips 66, PSX breaking higher already.
And the big ones.
Giants like CVX and XOM look perfectly primed, just coiled up.
Interesting. And on the other side of that coin, with the rate pressure,
Yeah.
we had real estate, XLRE,
Yeah, it took the biggest dive.
down over 1% as the bond market digests that higher dollar move. That rotation is pretty clear.
Yeah, it is. And pullbacks like this, they really demand discipline.
Sure.
When you see key trend lines break, like with the DIA, the trading wisdom is always to assess your high probability positioning and just stay nimble.
Got to know when to tighten stops.
Exactly. Protects that capital.
Yeah.
This type of disciplined risk management, analyzing the market's character instead of just chasing momentum, that's something we teach in depth through the hands-on coaching in the Grok Trade mentorship program.
Good point. So today felt very technical, analysis really driving the action, mostly because economic news was pretty light.
Right.
But tomorrow is huge.
Yeah.
We've got durable goods orders, the GDP growth rate quarter over quarter, and existing home sales.
Big ones.
Those releases are the major catalysts lurking, and they'll likely validate or maybe reverse these recent technical moves we're seeing.
Definitely something to watch.
Okay, moving away from traditional markets for a sec. Bitcoin. It firmed up that tight consolidation range we talked about last week, sort of between 108K and 124K, added a modest 1.4% today.
Yeah, just holding steady. Ethereum kind of tagged along quietly, too. And how about metals? Gold and silver, GLD down about 0.9%, SLV down 0.35%. They took I'd say a well-deserved breather.
Yeah, after a good run.
Exactly. But they are holding up strong overall. And this is where you remember that trading wisdom. Don't chase shorts in a resilient setup even after a pullback. The consolidation here looks healthy, not bearish yet.
Makes sense. All right. As always, guys, if you've got a stock you're watching or maybe a question about the markets, drop in the comments below. We might cover it in an upcoming episode.
Yeah, let us know.
And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free, and it helps us out in a big way.
It really does.
And click subscribe, too, so you don't miss a beat. You can always unsubscribe later if you want.
Yeah, absolutely. And look, that DIA trendline break we talked about and XLE's symmetrical triangle breakout, these are textbook examples of why technical analysis is just essential. It helps you find those high probability setups, especially amid volatility like this. That's really the core of our approach. And the Grok Trade Mentorship program, it's designed specifically to guide you through these precise moments. We offer hands-on coaching, and we have an ironclad promise to support traders until they recoup their investment and, trade like a pro.
Okay, so wrapping up, what's the strategic tension moving into tomorrow's GDP data?
Well, today felt like a necessary breather, testing those fresh highs.
Yeah.
But the major wild card is still that dollar challenge to its downtrend. And the key divergence is XLE, looking like it's ready to unleash that energy spark.
So the big question for tomorrow, maybe, hit the comments and tell us. Does XLE move first and pull equities up with it? Or does the DXY breakout actually confirm that underlying structural weakness we saw a hint of today?
Good question. Let us know your thoughts.
All right, wishing you a great rest of the day.
And we'll catch you in tomorrow's market summary.